Elon Musk shuts down and cuts all ties to a major Chinese division of Tesla Motors. How will this affect the supply chain? Even more importantly, how will the stock price handle this shocking news? Watch the full video to find out. Welcome to Trade Daily, where we break down all the best stock market news. Like and subscribe to keep up to date with the stock market. And I really hope you enjoy this video. Tesla's factory in Shanghai, China is its most productive plant. It has been upgraded to have an annual production capacity of about 1.1 million units. So it's not a surprise to see investors moving the stock lower when there are clouds on the horizon in China. As of 1 p.m. Met, Tesla shares were near the day's lows, down 2.6%. That is likely because of another resurgence of COVID-19 cases and restrictions in China. Tesla generates approximately 1/4 of its sales from its China plant. So when news surfaced that Chinese electric vehicle maker NIO has temporarily suspended operations at 2 of its plants due to local virus-related restrictions, some investors are betting it will also impact Tesla. Today, Reuters reported that NIO has halted its production due to efforts to stem the virus spread. The company confirmed that deliveries and production have both been affected. NIO's facilities are in Hefei, approximately 300 miles from Shanghai. But production at Tesla's Shanghai plant was already interrupted earlier this year by COVID-19 lockdowns in China, and Tesla's suppliers could also be impacted by lockdowns. Tesla doesn't provide monthly sales data, but NIO missed expectations for deliveries in October partly due to the COVID-19 related impacts. And Reuters has also reported that Walt Disney's Shanghai theme park resort has closed, with visitors being required to test negative for the virus to exit. Tesla's Shanghai plant is an important one for the company. Until its new German factory ramps up to full capacity, the China plant has also been supplying European customers. So it makes sense for investors to be concerned if production at the Shanghai factory is limited. It helps explain today's stock drop, but investors should know that the company's long-term potential won't likely be affected by these short-term issues. This comes as Tesla closes its first showroom in China in retail strategy shift. Sources Shanghai and Beijing. SAY electric vehicle giant Tesla has closed what had been its flagship showroom in China, a move sources described as one aimed at paring retail costs in its second-largest market. Tesla confirmed the closure of the showroom in Beijing's upscale downtown shopping center Parkview Green to Reuters on Wednesday. It said it had relocated the store to another mall called Raffles City. That showroom was opened in mid-October and is smaller than the original 2-floor showroom in Parkview Green. 2 people with knowledge of the matter previously said Tesla had shut the Parkview Green showroom late last week. The store, which opened in 2013, was Tesla's first in China and was renovated and expanded in 2018. And just before we continue, we're giving away a $50 Amazon gift card every single day. You just need to subscribe to the channel, like this video, and get the bell on. Also, comment at Love Trade Daily to lock in your entry. Winners will be contacted privately. Good luck. Now let's not waste another second and get right back into the video. A member of the mall's staff confirmed to Reuters during a visit to the site on Wednesday that Tesla had shut the showroom, whose windows are now plastered with posters belonging to the next tenant, a streetwear brand Babe. Their contract with us expired and Tesla decided not to extend it, the mall staff member said. A call to the store earlier in the day was redirected to the Raffles City showroom. Tesla owns and runs over 200 outlets across the country that display models and arrange test drives for potential buyers. Reuters reported in September that Tesla was considering closing some showrooms in flashy malls in cities like Beijing after traffic plunged during COVID restrictions. It also plans to put more emphasis on stores in less costly suburban locations that can also provide repairs as the company works to meet Chief Executive Elon Musk's goal of improving service for customers. As part of that effort, Tesla has been hiring technicians and other staff for service jobs in China. The company's China recruitment website showed 305 openings for service jobs as of Wednesday, little change from September. More than half of Tesla's China stores do not offer repair or maintenance services and are in high-rent locations where space is limited. That included the now-closed Parkview Green Tesla store. Tesla owns all of its own stores rather than relying on dealers. It also sells its cars online. That has allowed it more leeway to adjust a retail strategy that had been initially modeled on Apple's glossy stores in high-rent locations. Tesla has cut starter prices for its Model 3 and Model Y cars by as much as 9% in China, reversing a trend of price increases across the industry amid signs of softening demand in the world's largest auto market. Tesla sold 318,151 vehicles in China in the first 9 months of 2022, up 55% from a year earlier, according to the China Passenger Car Association. By comparison, overall sales of electric vehicles and hybrids increased 113.2%. Reporting by Zhang Yan and Brenda Go in Shanghai and Sophie Yu in Beijing. Editing by Stephen Coates, Kenneth Maxwell, and Bernadette Baum. Is Tesla a safe investment today? Barron Funds, an investment management company, released its Barron Opportunity Fund third quarter 2022 investor letter. A copy of the same can be downloaded here. In the third quarter, the fund declined 2.38% institutional shares, compared to a 3.37% decline for the Russell 3000 Growth Index and a 4.88% decline for the S&P 500 Index. The fund fell sharply for the year-to-date and trailing 12-month periods. However, the philosophy of the fund is to achieve strong long-term performance. In addition, please check the fund's top 5 holdings to know its best picks in 2022. Tesla is now on our list of the 30 most popular stocks among hedge funds. As per our database, 72 hedge fund portfolios held Tesla at the end of the second quarter, which was 80 in the previous quarter. We discussed Tesla, Inc. in another article and shared the list of the biggest global tech companies by market cap. In addition, please check out our Hedge Fund Investor Letters Q3 2022 pages for more investor letters from hedge funds and other leading investors. Why Ford, Tesla, and Nikola stocks were up this morning. Is the sale of a few dozen trucks a good enough reason to buy Nikola stock? So it's Thursday and stock markets are tumbling once again. The S&P 500 fell another 1.1% by 10:10 a.m. ET today. The good news is that automotive stocks were doing a bit better than average. After initially slumping, both Ford and Tesla were up about half a percentage point this morning. But the sector was being led higher by an unlikely hero, electric semi-truck maker Nikola, whose shares spiked early this morning. Earnings are the reason. This morning, the company announced that it beat earnings on both the top and bottom lines, delivering sales of $24.2 million and an adjusted loss of only $0.28 per share. Wall Street had expected $0.39. The company said it built 75 tree battery electric semi-trucks in the quarter, delivered 63 to dealers, and signed a purchase order for 100 more in November after the quarter closed. Nikola also described the progress it has made toward building a hydrogen energy business. It has purchased land for a hydrogen production hub and has tied up with a European energy company to secure hydrogen supply on the continent. Nikola also said it wants to build 60 hydrogen fueling stations for large trucks by 2026. In contrast, the news from Ford and Tesla wasn't so great. Yesterday, Ford announced a 10% decline in October sales, and today, Reuters is reporting that Tesla saw a 14% decline in electric vehicle EV deliveries from its Shanghai plant. That explains why neither of these automotive stocks was doing quite as well as Nikola was early today. And yet, while Ford and Tesla lack Nikola's good news catalyst today, here's what they both have that Nikola does not: profits. Over the last 12 months, Tesla put up an impressive $11.2 billion in net profit from its EV business, and Ford is not far behind with $9 billion in trailing profits. In contrast, Nikola is still sitting on a $753 million net loss for the same time period. And while its adjusted profit last quarter might have been better than analysts feared, Nikola still ended up with a loss of $0.54 per share for the quarter, when calculated according to generally accepted accounting principles (GAAP). Nikola might have the better headlines today, but I'd still rather invest in companies with profits.
And with that, we've come to the end of the video. I'd like to give a huge shout out to anyone who's made it this far. I hope you enjoyed the video. I'd also like to make it clear that this is a news and entertainment video, not investment advice. You should always do your own research and speak to a financial advisor before making any investments. Thank you all so much for your support. Don't forget to like and subscribe for the chance to win up to $20,000 in Amazon gift cards, and we'll see you in the next video. If you want more crazy trade news, how about this video we did?